and let's go to the economy. July's retail sales numbers are ahead 0.5%, reversing a sharp decline in June. But there is evidence the bounce might have been the Matildas and the World Cup. Warren Hogan, an independent economist, consultant for the small business lender Judo Bank, is with me. A Matilda's bounce for retail sales, why?
Well, obviously a lot of takeaway food, a lot of eating out, tourism, probably part of the story, but I think, it's a monthly oddity. I don't think we should read too much into it.
Okay, so here's the reality of it is we see the retail trade here. It looks a little better on an annual basis, but the fact is you can see it's down. Do you think there's a long-term malaise in Australia's retail trend?
Yeah, definitely, and that's because of where we've come from. We were booming for years through the pandemic with all the stimulus, the fact that we couldn't spend money on services, strong balance sheets, people having money, incomes going up. It is stuck. It can't grow because it's such a high level. We've seen a contraction in consumer spending, but it all happened late last year. It's actually been pretty flat in nominal terms this year. And of course, it's the good side of the economy, which dominates this retail sales report, which is the softest. The takeaways, cafes, restaurants, which you referred to with Matilda's, that was pretty strong. Yeah, this shows you the overall dollar spend going back 10 years. It shows you the pandemic, which just threw it all right into...
Yeah, you can see that, really.
Yeah.
But then you can see it's above trend. It's way above trend now.
It's miles above the pre-pandemic trend, but I've adjusted for inflation, and it's still above trend. So what we're seeing is an extraordinarily high level of retail sales last year. We've come back some of the way.
Isn't that all the COVID stimulus money?
That's all wearing out of the system. We're normalising, and what that means is even if we don't have a hard landing, we're probably going to have a hard landing for the consumer. It's going to be headwinds for retailers for at least another 12 months because consumer spending is at too high a level.
Okay, so the consumer spending is too high a level. The deliberate strategy of the Reserve Bank was to raise interest rates to take that demand out of our economy. It kind of hasn't worked up until now. You start to see some signs of it. But the fact of the matter is that retail sales rose this last month, and you say it's a one-month oddity, but they wouldn't want to see that going on month after month. Otherwise, they've got no choice but to resume raising interest rates.
That's right. I mean, we're thinking the most sensitive part of this economy is the consumer because of higher rates, higher mortgage payments, and there's a resilience out there. There's no two ways about it. There's definitely pockets of distress. There's people who are struggling.
Sure.
But the overall economy is actually still doing
But see, there's the point, because you go to Qantas, we're just talking about that, the high airfares, their load factors have never been higher.
Yeah, well,
they're actually spending money up the front. Somebody told me the other day, seeing you're in the travel industry, if they could actually make half of the aircrafts leaving Australia business class, they would. The only reason a lot of people are travelling in economy right now is because they can't get a seat in business class.
Exactly. And I think this is really important for markets which have got no chance of a rate hike priced in next week, hardly any chance of another rate hike at all. This is the resilience of the economy. We've seen it overseas. We don't need much to go wrong on the inflation front for the RDA to be back in the game. This economy is not slowing as quickly as some would have us believe.
Okay, so we saw the United States basically say, right, so we think that, yes, there could be another interest rate rise. Most people say there's not going to be another one there. There might not be another one here either. That's a reality.
Well, there might not be if these trends for a weaker economy continue, and there's certainly evidence of it, but the housing market's bouncing back. Let's see this CPI report for July on Wednesday. All the other evidence is inflation actually picked up in July and August. And the fact of the matter is our interest rate at 4.1% is still record low differential to the US at 5.5. So we're in a different situation to the US.
That's great. Warren Hogan, always good to have in the program. Many thanks for your time.